Let's talk about some of the key features of the Canadian tax system. The very first thing that I'll mention to you is the actual filing deadline, which happens to be April 30th, typically. There's a slight exception, however. Despite the fact that they keep on insisting that the deadline is on or before April 30th up here, you can see here exception on the due date is when the due date falls on a Saturday, Sunday, or public holiday recognized by the CRA. Your return is considered on time if the CRA receives it or it is postmarked on or before the next business day. So May 1st this year, perfectly fine. It's a Monday. Please don't wait until the last day, but technically speaking, it's still on time. One other thing to keep in mind is that if either yourself or your spouse/common law partner were self-employed in 2022, in most cases, you will be able to delay the filing of your tax return all the way to June 15th, with the exception of those working mostly in a tax-sheltered environment. Now, how are you supposed to know how much you actually owe the CRA in taxes without filing your taxes? That's a good question. But again, technically speaking, you do not actually have to file the taxes until June 15th, as long as you know that you don't owe them anything. So just keep that one thing in mind. In Canada, taxes are filed individually, meaning that every person has to send their income tax returns to the government in order for it to be assessed. Also, taxes owed, deductions, and credits are based on someone's residency status. In most cases, you're probably going to be considered a Canadian resident. However, if you're an international student, a recent arrival, or in certain cases, Canadian residents and Canadian citizens that have moved away from Canada for a year plus, and now you're just coming back, you may or may not be considered a Canadian resident in that particular year, depending on how long you've lived in Canada, having significant residential ties, etc. So again, read through this entire document, link in the description down below, in order to determine your residency status if you're uncertain. Lastly, it also matters what province you're a resident of in order to determine which one you're actually filing your taxes in. For example, Quebec has probably one of the most complex tax systems in all of Canada, so I'm going to use that as an example on the next few slides. Now, it's important to be aware that there are a number of tax credits and deductions that you might be eligible for, so have a look at this link in the description down below. I'm just going to show you very quickly. There's basically 100 different credits and deductions combined, and different ones apply at different levels. Let me just show you how that works right now. So we start off with total income, also known as gross income. So that's income from all of your global sources. And then you deduct a certain number of deductions that are eligible at this particular level, such as RSP contributions, employment expenses if you're self-employed, moving expenses if you've moved for at least 40 kilometers closer to your place of employment or full-time studies, as well as a number of additional deductions. Again, you can look at the full list of which ones of those 100 deductions and credits apply to gross income or net income or any of the other tax credits that we'll look at in a second. Total income minus those deductions give you net income, then net income minus a second tier of deductions that include scholarships, income that might be exempt under a tax treaty, capital losses from previous years, as well as a few additional things as well. Again, look at that list one more time, and that will then give you your taxable income. Now, you're taking the taxable income, and based on your income level, you will have a certain amount of tax owed or tax payable, basically. Now, from that tax payable, you can then deduct a number of tax credits. There are refundable and non-refundable tax credits. So a non-refundable tax credit is a tax credit that will be paid out to you if and only if you have any tax payable. So let's say, for example, that you had $1,000 worth of tax payable, but then you're eligible for a $500 non-refundable tax credit. What happens in that scenario? Well, you owe $1,000 minus $500. Now you still owe $500. So that's pretty sweet, right? You're getting the full non-refundable tax credit paid to you. What if the reverse was the case? You owed, instead of $1,000, you actually owed only $500 in tax payable, and now you're getting a full $1,000 non-refundable tax credit. Well, all that can do is that it can only reduce your payable tax to zero. That's all it can do. It cannot actually be a net positive number. Now, some non-refundable tax credits can actually carry forward to future years. So it's up to you really when you want to use them. Others, you have to use them or lose them type of thing. Like they're only good for that particular year. And if you don't have any tax payable, oh well, too bad. You're all you can do is just reduce your taxes to zero. Now, the last subtype of tax credit, the refundable tax credits, those are the really cool ones because they actually get refunded fully to you whether you owe any tax payable or not. Okay, so to summarize, if your tax payable is greater than the credits that you get, then you still will have some taxes due and you have to pay some extra money. If the tax payable is smaller than the credits, in other words, if the credits are greater, in that case, you will get a net tax refund. So very quickly, there are a number of key tax slips. You have the full list of both federal and Quebec tax slips in the description down below. Most people will probably get a T4 slip, and then if you happen to live in Quebec, you'll also get a RL1 equivalent. If you were unemployed at any point in time during 2022, you will get a T4E. If you're a student, you'll get a T2202. And if you're a student that happens to be in Quebec, you'll get a T2202 as well as an RL8. Scholarships, again, if you've received any, if you're in Quebec, you'll receive an RL1 on top of the standard T4A. As for investment income, most people typically receive a T5 as well as an RL3 if you happen to live in Quebec. T5s and RL3s are only issued, however, once you make at least $50 per year from a given institution. So that could be a combination of dividends and some capital gains, or dividends and interest payments, or just interest payments, etc., etc., etc. So if you make less than that, the institutions typically do not issue a T5 and or an RL3. Okay, just keep that in mind. Landlords, again, if you happen to be in Quebec, you will most likely have to be receiving an RL31. That's part of the solidarity tax credit. Again, if your income is beyond the minimum level allowable for the solidarity tax credit for housing, you're not going to be able to use it, but they should be sending you one nonetheless. Again, this one only applies to Quebec residents, as well as this last one over here for childcare and daycare expenses. The RL24 and the RL30 will also be received. There are obviously additional tax slips, but these are really the main ones that most people will get. If you receive additional ones and you're not certain what they're all about, have a look at these links up here that I mentioned before. Make sure to keep a copy of all the documents that we just talked about for at least 6 years, just in case you get audited by the CRA. If you happen to have moved for at least 40 kilometers or closer to your new place of employment or full-time studies, make also sure to keep a copy of any expenses relating to travel, hotel, food, or the movers themselves. You might be eligible for that tax deduction. If you had any medical expenses as well, make sure to keep copies of those receipts for pharmacy, therapy, dental, etc. Also, if you are currently paying any student loans and you have any interest payments due, make sure to keep a copy of those interest payments. Those are also tax deductible. Any charitable donations that you've made, make sure to keep copies of those for at least 5 years. And finally, any business income and expenses, home renovations for owners, children's activities, etc. Make sure to keep copies of those where relevant. Bonus tip, since you stuck around till the end, I've included a link to the Revenu Quebec website that lists all of the accredited software that works both for Canada and Quebec itself. The CRA has a similar list on their website, but that one doesn't necessarily work for Quebec filing as well, whereas these, they work for both. I've created a few tutorials for some of these software. Those that are already available will be listed in the description down below. Have a good one.